Okay, wonderful, wonderful. We will start now. All right, guys. So, what's up, everybody? And hope you are all fine. This week has been an incredible week for all my community members. It's Tony here again, and welcome to the Tony Trades channel. We're live, so we'll be having 40 solid minutes of sharp aftermath trading. Without wasting any time, we've had CPI and jobless claims changed, which was yesterday, and today I'm just going to trade the footprints that they left. Okay, this week has been quite volatile. We've been able to secure a lot of profit, and without wasting any time, I'd like to encourage you all to use the promo code on pocket options for 100% bonus. So if you want some extra ammo in the game, this could be a really nice way to leverage on the market. If anything, the link is in the description, and I'll definitely keep you guys updated on what new tools and features you could use with the current broker that I actually like to use. Now, just a recap. Let's see. If you open your calendar, your economic calendar, I want to highlight that Monday through Tuesday was pretty quiet, and we started to see some numbers, some fundamentals trickling in on Wednesday. That was core PPI, and yesterday was like the highlight, where we had core CPI data at 0.3. We also had CPI that was month to month at 0.4%. So we expected 0.3%, so pretty much hotter than expected, while the CPI was 2.9, which was expected, right? Now, we have unemployment claims that came at 263,000. We expected 235,000. So the translation here is the headline inflation, okay, surprised hot, while core was steady and the jobless claims printed softer. Once again, if you've joined me, just write something in the comments. Put a plus if you can hear me, and you could also write where you are plugging in from. So back to what our topic today is. We're going to look at CPI and job data live from yesterday. Of course, we're pushing and trying to get some structure for some trades today that you'll be able to see and engage in. Now, so when we have inflation pressure, remember, while labor shows cracks, we went through across all the USD pairs, and what did we notice? We noticed the initial USD strength. If you look at it from a weekly perspective, you could pull out any chart. I'd like to start with, say, USD card. Now, if we clear all that and just have few nice charts there, we could see the strength in the USD. That is very evident, that is very clear from the jobless claims printing softer. Now, that's a tangled signal, right? Inflation pressure remains while labor shows cracks. Markets responded with initial USD strength, all right? Then they chopped as traders digested the growth side. This is on the meso level. Now, inflation, once again, inflation, let's unpack inflation. But we're going to do it very fast and deeply. So, because you see, trading, as I've always mentioned in my lives, it requires more than just the headlines. These headlines that you see here, oh, by the way, a quick note, whenever we trade CPI, Uh, I always recommend going straight to the source, and that source is the US Bureau of Labor Statistics, all right? That's the government agency that publishes the official CPI data every month. It's right there in your eyes, guys. So there's nothing like rocket science here. It's just being able to dissect some of these numbers and integrate them into your strategies. All right, I'm not sure you can hear me, but we are live, and we have a few people watching, which is incredible, not bad. But I want to go slow with some of these explanations because many of you keep asking me how I dissect this. So this is how I do it. I open up the economic release calendar, and you could check out their official website and just look for the recent releases. Now, this government agency publishes the official CPI data every month. Now, here's what they told us from just this brief summary. Well, if you don't want to go deep down into all the details, there's a summary that you can find called Consumer Price Index Summary. Now, the headline, CPI rose by 0.4%, right? We're looking at 0.4% right there. And it was hotter than July's 0.2%. Now, if you correlate that to the calendar that is open source, that's Forex Factory, you could see that, right? You could see that very clearly. Month to month, 0.2 was expected, 0.3, we got 0.4. And this Bureau of Statistics pretty much breaks down everything. Now, if you look year over year, inflation is running at 2.9%. 2.9% up from 2.7%. The core CPI, which strips, again, core CPI, we looked at that with the card dissection on previous streams. So the core CPI strips out food and energy, which stayed, of course, at 0.3%. And that was month to month, and 3.1%. So if you read this carefully, you'll be able to identify that. Right now, the biggest drivers, we look at shelter. Now, you must understand that shelter was up 0.4%, food was up 0.5%, and energy was up 0.7%. All right, so this is collective. We have utility pipe gas service, we had electricity, and so forth. So the cool part, what is the cool part? This data is public. Like literally, it's free and straight from the Bureau of Labor Statistics, all right? So as traders, we're not guessing. We're just literally using the same numbers that the Fed uses. That's why CPI days create massive volatility, like I'll show you in some of these charts. Yes, besides volatility, it's very important to know why. When you read the breakdown, it gives you that extra age, all right? And you all want to use that age. So now I'd like to talk about headlines versus cores. When you look at headlines versus the core, when we have a headline can be like CPI, all right? CPI, a headline saying 0.4 right there in green. All right, we're having some people messaging me. Let's see. Some people messaging me. Yes, please write in the comments. I'd love to answer all your questions there. If it's a little bit complicated, don't forget to join my community. I have a free course for you to start off and acquire some fundamental knowledge. I'm not sure if others are explaining these things, but I'd like to explain to you guys what happens at the micro levels. Now, if the headline is 0.4%, this is the headline versus the core. It includes food, energy, and the core, which is 0.3%, it strips. So the core strips those out to expose the underlying price pressure, which I call the stickier part of the Fed. What the Fed cares about. So the Fed actually cares about the core. That's why you hear a lot of traders out there of fundamental traders talking about core. Now, components, like you've seen, can include shelter, rent. If shelter is slow moving and lags, it keeps core sticky for the month and so forth. We also have wage channels, wage growth feeds. We have medical care services, we have transportation services, and a lot more. So practically a hot headline, core means transient supply shocks. I like to break it down like that. So it's just a supply shock and sticky service. The market will test whether the inflation impulse is persistent, and that's what we trade via retests and continuation plays. So when you have that in mind and you look at your say support and resistance within time frames, you've already mapped out your highs and your lows. Don't forget the highs and the lows, the true highs and the lows. I like to keep it with bar chart. All right. So with bar chart, you could look for highs and lows. Right there, you see currencies. We have highs and lows. Now, you could correlate a pair like USD CAD with a high and a low. If you look for that USD, we can have it there, USD CAD right there. Once you open that, you could check the full chart and compare your highs and lows. So after you've mapped that out very well, you want to work with those highs and lows, all right? Because sometimes the data lags and you might not be able to get the real highs and lows. All right, now labor deep dive. All right, job claims versus NFP. We've talked about this already. We had NFP the previous week. If you scroll back, and I dissected that quite well. We had the NFP here coming up. We had where was it? Right there, we had 22,000 non-farm employment change. We had unemployment remaining at 4.3% and unemployment rate at 7.1%. Now, the key points from this, the reason why I keep looking back, it's very important to get context. Context helps you create a narrative when you're going into any strategy. So if claims are rising, we mentioned this earlier, the early signal of labor cooling. It's just a labor cooling signal. Now, if you look at NFP, the monthly, it's the scorecard. It's noisier, but very meaningful for wages. Very meaningful for wages. And you can actually compare that with yesterday's CPI data and break it down. You'll be able to understand the Fed pulse, all right? I like to say Fed pulse. Now, participation rate matters. Why? A falling participation can hide unemployment, right? It can hide unemployment improvements and keep wage pressure very high. So, as simple as that, when you combine the two, we have hot inflation plus rising claims. It creates a policy impasse, all right? So the Fed sees inflation, that's not done, but the growth and the job market are softening. So that is the classic stagflation scare. Most markets, that means bigger directional whipsaws and bigger opportunities if you manage risk. I'll talk about risk separately. Please put a like, subscribe. Don't forget to join some of my channels and keep to update with some of these fundamentals. All right, guys. So I've opened up the USD card, the GBP USD, gold, and Euro USD. We'll be going through each of these and trying to map up some of the opportunities. Now, I'd like to remind you today is a Friday. There's not much of the fundamental news coming in, so you pretty much wanna limit your trading, all right, to a few trades. The reason I'm bringing this up is because some of the most volatile news has already passed. So if you ever want to continue with trading, you have to have that background story, and basing on that, you could catch maybe a swing over the weekend into the mid half of next week. Now, macro implications. So a macro quick primer for you is how the Fed reads this. How does it read some of this data, yesterday's data? All right, one, we have policy rule. The Fed is data dependent. Okay, the Fed is data dependent. What does that mean? It's forward-looking. Core inflation persistence delays cuts. I want you to pay close attention to this number here, the actual 0.4%. All right, versus 0.3%. If core inflation persistence delays, it means the cuts will be delayed. So soft labor can moderate rate expectations. Now, if you look at the yield, all right, that is on the contrary. If you look at the yield, hot CPI, if you get a hot CPI, doesn't matter. It tends to lift nominal yields, but rising claims cap how high yields go, because remember, growth fears bring buyers into long duration. So the net outcome is yields can move up sharply, then settle. Hence, volatility in the rate market spills into currencies and equities. Now, don't forget as well, we have seasonal tendencies that I like to also use. And I'm just randomly sharing some of my edges that I use to get a grip on some of the macro leveled pictures with currencies. So if you could check out the seasonal tendency chart, I usually use more research, but this is another open source free website for you. It can kind of give you a picture. If you look at monthly performance heat maps, you could always compare the market in currencies, all right, from January, February, all the way till December. Now, we are in September, so you might want to pay attention to September, the currency, and how it's reacting. So the US dollar is kind in between green and red, so it's yellow. Now, below here, they explain exactly what that means. So you want to jump in when the US dollar is green, very bullish, right? Red being bearish, and this being a little bit neutral. So depending on your pair, for example, if you're trading USD card, you want to check out the seasonal tendency for the USD, okay, and the Canadian dollar. If they match, that is pretty much not what you want. You want something that is a little parallel to each other. You want the opposite sides to engage. Now, here you could see the USD card. We are in September. The yield right there, September, which is minus 0.0037. Okay. We also have indices, we have bonds, and so forth. So this is a nice indicator to kind of get you more confirmations. And of course, for my crypto boys, we have alt season. Oh, actually, we've passed 75, so we are officially in alt season, by the way. So this is very good to monitor, because you will understand where the big money is flowing into. Don't forget, in my previous streams, I've repeatedly mentioned using the CFTC data. and that is particularly legacy commitments of traders' net positions. We have the non-commercials that I focus on, that is the large speculators versus the commercial large, these are institutions and so forth. You could look at the summary report that gives you an insight. Now, what I'm talking about today are all confirmations for any of the instruments you want to trade. This gives you a bigger picture, a bigger insight. You start to understand you are an informed trader when you're jumping into the trades. Don't just jump blindly. And you see real rates, again, nominal yield adjusted for inflation expectations determine real yields. And I will mention this again. If inflation expectations rise, it means real yields may not move as much. So that is bad for the currency carry story. What I want you to remember, right? Once again, in my group, we break down this step by step. You don't have to be very confused. This sounds like rocket science to many, but if you are a novice trader or even an advanced and you want to get around the fundamental side, I suggest you check it out and you go step by step. There's a nice step by step structure that I've been able to articulate for you. You don't have to pay a penny. You just get in there and get your hands dirty, because that is the only way you might want to learn. So what I want you to remember from this is that markets price the path of Fed cuts, not the current rate. I'll just repeat that one more time. You see these rates here that we get, the USD rates? The markets price the path of Fed cuts, not the current rate. So yesterday's data that came, it pushed cuts farther out. Just because of this, it pushed the cuts farther out. So today we trade whether the narrative consolidates or reverses. Okay, enough of all the theory. Now we want to practice this. So what is my tactical part? How do I actually trade the aftermath? We've had a Thursday, we're having a slow Friday now. How do I trade this aftermath? I'll be practical and try to use some of these rules. So I have a checklist, right? Before any entry, I have a bias. So based on yesterday, okay, we have neutral, which is slightly USD bullish until proven otherwise. So hot CPI was anchored. Hot CPI was anchored. I hope I've explained this really well. And the structure are these zones, support and resistance, from the true highs and the true lows. Also, if you are able to break this down into our 15 and 30-day period, all right, let's do it together. So we have two lines there. Okay. So we clearly had a support right there. And if you look at the previous, okay, where is our wick here? Okay. So this will be the week, pretty much weekend or week close. All right, 1, 2, 3, 4, 5. So we had another, I'm just going to draw this right there. We had a low right there. Okay. We'll make that red. And I'll have another red patch there, highlighting the previous high. So okay, so this was last week's, the red represents the last week's highs and lows, while the green is this week's low and high. Now you can see markets move in waves. We have expansions, we have distributions, we have accumulations, and we also have um, consolidations. Now, you don't, we've talked about this multiple times, but if you're just joining in, we want to avoid some of these trends like consolidations. We have a totally different strategy on playing around with consolidations. Now, as you can see, the market is trying to rebalance the previous week's high, rebalancing it all the way up here. It's just New York open, so we might get that full-blown retracement back into the previous week's high zones. All right, now you want to elaborate that by drawing your zones right there. These are for my swing traders. So this zone could be an area to look at. Looking at the fact that the USD is strong. So you have some structure, you've built some structure on a bigger time frame. You've shown that, you've drawn your resistances, you've drawn your support levels. Everything is starting to make sense. Now you have a reaction window. If you go down to a much lower time frame, okay, this was a break over the strong zone. A reaction window is where, you know, after a retest, or any continuation, you need to wait for about 2 to 4 1-minute candles. This is on the minute time frame. Okay, if you have a retest there, like you had a tap right there, you have to wait 2 to 4 1-minute candles to confirm the momentum. If the momentum is not confirmed, then it ceases, right? You don't want to act on candle one, just one candle. You need to have at least 3 taps into that zone, and only then you could get that bounce off and trade. Of course, you could add your Fibonacci there for more confirmation, but we'll talk about that later. Now, trade types and expiries. I want to mention that pocket options has the spike scalp. All right. The advantage that I like is it has the 30-second to 1 minute expiry. These expiries are pretty nice because you only use it on clear impulse candles. For example, like this one here. We have a retest candle. So once the expiry is done, you could place your trade, and then only after it will have that particular size. So you want to risk again 1% of your account. Example, if you have $1,000, you want to risk $10, right? On pocket options, for example, that means when you stake an amount, you are willing to lose, not leverage the size, all right? You keep the maximum drawdown at 5%. So it steps away if hit. For those of you scaling, you want to split stake into 3 parts. That is 50% at entry level. So you do the math. We have 25% take profit, and at 1.5, say 25%, you let it run with tightened mental stops. Mind you, I'm using a mental stop, all right? Now, for those of my professionals out there, you understand what I mean by a mental stop. We have a hard stop and a mental stop. Now, after drawing these zones, we want to position ourselves for an execution. Of course, you want to look at the stochastic. We've talked about the stochastic last week, the average true range as well, so I'm just going to remove that. But for purposes of the USD card, you can see we're hitting the lower boundaries, and we could be moving up, while the stochastic is changing right above the 80 and can only be confirmed once it's crossed. So I'll remove that not to populate my chart. So there you have it. It's very slow today because we don't have a lot. Now, what I've explained today is mainly about my long-term traders. If you're doing a swing, if you're looking in for anywhere around 10 days to say a month, this will definitely work for you. Now, you do the same for all the instruments that you have analyzed, and every move should be watched. Friday isn't the best time to move in, especially in the last session. So we're looking for continuations. If there's any significant pullback and our zone hasn't yet been tapped, you want to go long. All right. In this way, you could use where is this? You could use a. Let's see, where is this? We had a. Yeah, just a moving average to confirm that. So you could see it's pretty strong. Once we get the top, you could move forward with a hard buy stop right above that strong level. So you want to place your limit, your hard buy stops right above that level. So once we get the top multiple times and you get confirmation, you could confidently get in with a buy. All right, now very important to analyze retests. So on Fridays, usually we have that stretch. We have that stretch to fill in part of the week's high or low. All right. If you look from the daily, you could see that stretch trying to tap into the full range. So I look at 30% off as a discount from the previous week's high and low. It might not really tap in there, but you can gain some edge when you just jump in from the retest. All right. This is really hard to explain if you're a novice trader, but to break it down, you simply have to wait. So today we have been trying to understand and of course explain how macros, fundamentals are intercorrelated. They intertwine and they are very important when you are say trading any currency pair. Now about options, when I use options, pocket options, you can't place any stop loss here. Okay, the reason is your stake is the maximum that you are willing to lose. Your expiry, you use the expiry selection and scale for risk control. So USD card is pretty low. We might want to wait for some of the New York volatility that could come in. Now GBP USD, we have, oh boy, let us see, let's remove that. Yeah, we have lots of consolidations going on with the Euro USD. On the daily, you had a break, it looks like a break, and we have clearly tapped into this zone here. Now this is also another hot pair to watch for next week, so that you could profit on this. I'm just looking to see what price will do when it reaches here. Is it going to consolidate? Are we going to get a false breakout? And these are, once again, these are swing trades. Is a slightly longer, nothing to do with scalping, all right? Because Friday, unless we get some good confirmations, we will not even waste our time, because we have made quite a lot, very significant profit this week. You don't want to lose that on a Friday, all right? And to all my viewers and community out there, just want to let you know, use this promo code, get 100% bonus, and stop wasting time. Get that ammo and ensure that you are using most of these features. This very user-friendly platform that I like to use. Oh, you also have a market. Here you could purchase some gifts. You have gem mining, you have social rewards. This is really cool. If you look at the right, we also have social trading. You could look at the top ranked traders for 24 hours. Look for the top 100 traders. I'm actually in there. For those of you that are following me now, you could scroll and see my portfolios. That way you just need to copy them. As simple. We have Andre here. We have some people from South Africa. We have okay, we got some people in Asia. Yeah, just follow them. Look at the number of trades. Look at their statistics. You know, trading has a lot to do with psychology. You cannot only focus on your you have to be very open-minded and look into what other people are doing. That way you could learn. It's a learning curve that never ends. And the more you practice, the more you get better at it. So don't give up. Practicing every day will definitely sharpen your strategy. Now, takeaways that I'd like to talk about. You see, if your account, if you have, say, $1,000, okay, and you risk 1%, that is $10 per trade on pocket auctions, right? That will be $10 is the maximum loss for the stake. If your account is $5,000, 1% is about $50. So if I plan 3 trades, maximum in a session, my total risk budget is 3% of that account. So a maximum session drawdown should be 5% if hit. Just step away and review the chart later. Do not force trades. If you're in my community, you see my success rate is actually very high because I stick to a limited set number of trades a day. Once I hit my targets, I am done. I am done. I have 3 training sessions to look at. I need to refresh my mind. Don't forget to get involved in some kind of exercise. It's very important for your trading growth. And today, as the theme suggests, CPI data live. This was an idea of how an expression of how I see the markets on a Friday, especially after having fundamentals trickling in. We've seen the aftermath. So learn to trade the footprints. This is my conclusion to you guys. Learn to trade the footprints. After the session, all right, we have a special group. You could post your live trades. Just do a screenshot, send it to the group, label it, you know, write a little bit, journal, and we will be there to, of course, comment. Some of you are sending me a lot of very beautiful, well-mapped charts, but you lack the fundamentals. I always mention fundamentals are as important as the technicals, all right? Actually, they supersede. If you look at seasonals, I've just showed you how to look at the seasonals and integrate it with your fundamentals. Now, another thing is also using budget. So tinker with some of these sources that I sent to you. They're very important. Get yourselves accounts. Just play around with some of your strategies, and I'm sure you will have a much better successful rate. Now, ladies and gentlemen, today we are not having yet any significant movement, and I don't want to rush it. We will probably see some finish off exhaustion for the New York section coming in a few minutes. Map out all your charts, and you want to keep an eye on those zones that I've drawn. These zones are powerful. This is from the institutional perspective, we actually don't see these candles. We just see the zones that are translated into psychological levels that retail traders understand. However, you want to also pay attention to where we are in the month. We're in September. This is the end of the third quarter, and things usually steam towards the end. If you look at the seasonal tendencies every day, you'll see those colors change, and you want to be in the sweet spot for a beautiful trade. You don't want to be left behind and trade blindly. So thank you all. Subscribe to my channel, join my pro group, check out some of all the videos that I've released. They're incredibly informative. You get to learn how the professionals see the market, how they actually trade. A lot goes into preparation, and be a part of this life-changing community. Make money and learn how to be financially free. It was a pleasure, and see you in the comment sections. Share this with your friends, and stay tuned, guys.